The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Monday, September 30th, 2024. My name is Ken Shorgen, and we're going to take a look at where there wasn't a whole lot of economic data today, but really some more macro events, such as the hurricane, and starting tomorrow, it looks like a strike on most of the major ports on the eastern seaboard. So with this in mind, let's go ahead and jump right in and see how the markets fared today. Well, it was kind of ironic. Waiting until Powell spoke this afternoon after 2 o'clock Eastern time, the Dow was down in the red all day until the very final part, the last 15 minutes of the market. The Dow actually lost the 42,000 handle, only to end up in the green by 17 points. As I mentioned, the Dow was up 17 to close out the day at 42,330. S&P 500 was up 24, closing out the day at 5762, and the Nasdaq closed up 69 points to 18,189. In the bond markets, well, yields were back up across the entire spectrum of the yield curve. 1 month through the 30-year also increases, with the 10-year up 0.035 to 3.787, and the 2-year was up 0.045 to 3.645%. In the dollar markets, a good stronger day for the dollar in relation to the basket of currencies it faces. Dollar on the DXY was up 38 cents to 100.76. Inching closer to 101, but then declining and being flat for the last hour. Meanwhile, gold saw a sell-off along with silver. Gold was down about $25.40, closing out the trading day at $26.33, while silver was down 55 cents at one point, dropping to $31.07. but closing out the trading day at $31.21. Go for the gold. Goldman Sachs raises precious metal price forecast amid secret buyers. So while Goldman Sachs and other investment banks are not at all promoting gold and silver to their investors, the smart money is buying gold no matter what. And of course, they're not going to release the names of who's buying it. Goldman Sachs precious metal analysts have raised their gold price forecast from $2,700 to $2,900 an ounce for early 2025. First, economists now look for faster declines in short-term interest rates in the West and in China, and recently showed that the gold market doesn't fully price in the rates backed by physical gold yet, which tends to be gradual. Meaning they expect that the bull market still hasn't really kicked into high gear. Secondly, our new forecast shows that EM central bank purchases on the London over-the-counter markets continue to fundamentally drive the rally since 2022, believing that the structural purchases will remain elevated. What they're not telling you is who's buying it, and we know for a good portion, a lot of it's coming from China, from India, especially with the duties that were lowered in India, and the West still continues to refrain from buying gold and are pushed towards treasuries, as well as things like cryptocurrencies. Speaking of that, in the cryptocurrency market, the last 24 hours of trading, Bitcoin, which had gotten as high as 67,000 on Friday, was down 3.04% today for the last 24 hours trading, closing out at 63,627, while Ethereum was down just short of 2% at 2606. In the oil markets, WTI was up just a shade and Brent crude was down just a shade. WTI was up 18 cents, closing out the trading day at $68.35, while Brent crude was down 21 cents at $71.77. Looking at the week ahead, got a few things. Of course, we're entering into the week of a new month, so that's going to mean the jobs reports are big during the first week. Today, we really didn't have too much. Chicago purchasing managers. But tomorrow, we're going to have ISM manufacturing, JOLTS job openings, total vehicle sales. Then going into Wednesday, we're going to have ADP unemployment. On Thursday, initial jobless claims, ISM services. And then on Friday, of course, the non-farm payrolls, the unemployment rate, and the like. So it's jobs week going into this week of economic news. Well, I mentioned Powell spoke this afternoon for the first time since the FOMC, and he pours cold water on the rate cut euphoria, which means that despite the fact that he and others on the speech after the FOMC 2 weeks ago were propping up the fact that now it's time to change course and shift gears, he is changing it back, saying the economy is great and we're going to slow down and look at data dependency. U.S. macro data is on a charge higher in September, surging to its strongest since late April. The September markets ended on a weaker note today after China's stimulus piled on top of the supersized rate cut which sent stocks soaring last week. European stocks ended practically unchanged for the month, while U.S. stocks were marginally up and China soared. Okay, moving up as well. Time is running out. U.S. port strike could begin as soon as tomorrow. Time is running out for the International Longshoremen Association and the U.S. Maritime Alliance, a coalition of port operators and carriers, to form a new labor contract as the existing one expires tonight at midnight. A no-deal scenario would mean thousands of longshoremen at 36 facilities across 14 Gulf and East Coast ports would begin strike starting at 12:01. So, while the Eastern Seaboard has been utterly devastated due to the hurricane, the Biden administration has decided that they're not even bothering to go out to check on that till Wednesday. And of course, that means that the strike will have already started into its second day. So we're going to have a slowdown completely on the East Coast, a complete shutdown. And what that does for the economy, because every single day that ships don't come in, don't get taken off, that's retailers not getting their stock. That means shortages across the country, especially east of the Mississippi, and it's going to increase prices and inflation. And there's nothing the Fed can do by lowering rates if there's no supply to provide for demand. Finally, last thing we're going to touch upon, the modern economy rests on a single road. And guess where that road is? It was right where the hurricane hit. In March, a Wharton professor who studies artificial intelligence and startups claimed on Twitter/X, the modern economy rests on a single road in Spruce Pine, North Carolina. The road runs to the two mines of the sole supplier of the quartz required to make the crucibles needed to refine silicon wafers. According to Ethan Mollick at the time, there are no alternative sources known. The supply disruptions were seen in Spruce Pines, and guess what? A bridge heading to those mines was taken out during the hurricane. Let's see, absolute horrid pictures coming out of Spruce Pine, North Carolina. So now we have the potential, not just on the strike that is about to hit the East Coast, we also have the potential for a complete shutdown of the chip manufacturing in the United States and a slowdown of the AI process. So things are getting pretty hairy as we are just about 1 month away from elections. Anyway, I want to thank everybody as always for stopping by to get your, albeit quick, market wrap up for Monday, September 30th, 2024. I want to go ahead and thank everybody here at the Sirius Report community. Don't forget to subscribe, like, share, comment. share this out to anybody you think would be importance. And until the next time we get together, everyone, have a great Monday.